are you?
Good morning, friends, family. I don't know if I have any family listening, but maybe a fourth cousin twice removed or something. Good morning, good afternoon, good evening, wherever you may be, however you may be listening. Thank you for joining me today. As always, a great way that you can support the channel, a free way, is to hit that like button. Leave a comment. Somebody shared with me what they had for breakfast on Friday, and I really appreciate that. I think it is appropriate for us to start out with GameStop. Here we go again. Deep effing value. What am I looking at here? I think if you've been following the channel for a while, you know exactly what I'm looking at here. He posted on Friday that he doubled the amount of shares that he bought, his last purchase price being $40.59. And hey, maybe that's the floor, I don't know, but increased his position to 100,000 shares, revitalizing the Wall Street bets community, no doubt. And so who knows, maybe this is the beginning of something, maybe not. I have said repeatedly on my channel that I am going to be more reactionary than anything else with GameStop, and so I will follow you lead, GameStop. And so I've also said I'm buying $10 a day worth of GameStop, and maybe that will continue into perpetuity. Who knows? So anyway, GameStop, deep value, deep effing value, increased his shares. Pre-market, GameStop's up a little bit, you know. I mean, not a little bit. 11% is not anything to go crazy about. The highest I saw pre-market was $47. I don't expect anything crazy to happen. If it does, fantastic. If not, I like the stock. I will keep buying. So, interesting thing on Wall Street bets as well. Again, now the GME mega thread is back. People are excited. They're talking about GameStop. Have we hit the bottom? I don't know. I always thought there would be some kind of overcorrection. Have we overcorrected? We'll see. Honestly, there is room to go lower, but maybe not. Maybe this is it. So maybe people see $40, $45 now as an attractive buying position. We will see. So, in other news, Bitcoin. Oh no! Oh, Bitcoin is crashing all the way down to previously never before seen levels since last Friday. Dramatic pause for effect, guys. We have crashed to last Friday levels. And okay, let me extend this chart. We got up to $58,375 or something like that for Bitcoin. And I guess I need to extend this chart a little further. Nope, here we go. So where were we last Friday? That's when we jumped a little bit. You know, we saw some nice gains. And here we are on Monday. And oh no, we're crashing. Everybody get out. And guys, chill. I would assume that you're not freaking out about this. If you are, just some perspective. It's been 3 days since we reached this price point, okay? And I am on record. I did say, I think I said this on Friday, that we're getting a little too hot. I showed you the MVRVZ score. I showed you, and again, if you don't know what the MVRVZ score is, just look it up and see the last bull cycle compared to now. See January 8th. Look at where the MVRVZ score was on January 8th. We were pretty much at that same point. So we were due for some kind of a correction. I could see this going down as low as, I don't know, $45,000. And I've been thinking about this a lot more. I think in this bull market, what's happening right now is that we are in a position right in between the 2013 bull run and the 2017 bull run. So 2017 was slower and more drawn out, and then saw this massive peak at the end of the year. 2013 had a blow-off double top, and so there were 2 points where there were massive sell-offs. In 2021, I don't know what we're looking at, I'm thinking that we're going to see some kind of a peak in July, August, September, October at the very latest. But that won't be the end. But I don't know what the end looks like as far as a crash is concerned or a correction. I don't know when that peak is going to be. I don't know where it's going to be. It could be at 200,000. I honestly, in comparison to other people who talk about crypto, when I say the peak could be 200,000, honestly, I'm one of the more bearish people who's in on this. And so there are people saying things like, yeah, we could top out at 280, at 300, at 400,000 this year. I just don't know. The thing that I am wondering, that I'm more concerned about, is where we bottom out over the next 4 years. And my guess, my most bearish scenario after this bull run, is that we will bottom out around $60,000. But I honestly, I think the bottom will be much higher than that because of the level of institutional investment right now. But as far as now is concerned, we're talking about 3 days. A crash to levels of 3 days ago. And honestly, I mean, really, if we crash to 45,000, that puts us less than a month ago. And so that's not even a big deal either. But I just know that there are people who have gotten in, and if they were to see a $45,000 Bitcoin, I think they'd get a bit afraid. And I'm just saying, relax. Especially if you got in from you were riding that GameStop hype train and you got in late and you lost money and now you're seeing Bitcoin. I'm nervous about you, who, if you bought in at like $52,000, for example, and you see it go down to $45,000. We are not seeing a drop from equivalent of $400 in GameStop to $40. That's not happening with Bitcoin. They're not even close. It's going to be the equivalent of a $400 to $350 drop. And for all I know, honestly, like, this could be the bottom. I'm just saying, I could see it going as low as $45,000. I have no crystal ball. It's just MVRV, Z-score. That's a big measure that I pay attention to, and so I think you should too. So anyway, Bitcoin, man, lots of distractions. My kids banging around, some sirens going off outside. Anyway, Bitcoin, it's interesting here. So pricing Bitcoin, pricing gold, food, and altcoins with a Bitcoin denominator, how to measure assets worth in Bitcoin. The thing that I thought was funny from this article is that when Bitcoin got to about $57,000, $1 trillion market cap, that we crossed the kilo of gold, a bar of gold equivalent is the price of Bitcoin. And so moving on up, who knows where we're going to be as far as where we're going from here. I also want to share with you just a mistake that I made on Friday. And I just don't want you to make the same mistakes. I want you to pay attention to the right sources. I'm sure if you're watching me, there's probably other people you're watching. But I made a mistake, and I'm going to share that with you. Here we go. This guy, Crypto. So there's two guys in this video, and I like to pay attention to both of them at times. Crypto, the guy on the left here, I don't actually know his real name. Look at this title. Just look at he's the master of clickbait, and he got me. Bitcoin to $1.2 million this year, proof of super cycle. Now, I want to address this title real quick. Is there a scenario where Bitcoin hits $1.2 million this year? Actually, yes. And I say that with some trepidation. Yes, it involves what kind of scenario do I picture this happening? One where the US dollar collapses, which I'm going to address later on in this video. But two, a scenario where we're running out of Bitcoin. I mean, guys, there will come a time soon enough when you won't be able to buy Bitcoin. You will not be able to go to Coinbase and buy Bitcoin. You won't be able to go to Femex, to wherever else. You won't be able to go there because we're running out. Because Grayscale is buying 3 times the amount of Bitcoin that's mined every day, and PayPal and Square, Michael Saylor with MicroStrategy, they're, this week, they're buying $2,000 a second worth of Bitcoin until they get to $600 million. We have institutional investment like we've never seen before. We have Apple rumored to be buying $5 billion. We have other companies that are getting in. Morgan Stanley has been getting in. They own 10.9% of MicroStrategy. They are rumored to be diving into this headlong. There isn't enough Bitcoin to go around. And so is there a scenario where we'll hit 1.2 million? Yes. I don't think so. I just don't think so, though. But when you pair the fact that we are the ice cube, which is known as the US dollar, is melting away rapidly, along with the fact that people are starting to open their eyes and we're reaching an inflection point with mass adoption, mass institutional adoption with Bitcoin. Yes, there's a scenario where we could hit $1.2 million. But I watched this video, I got excited, and I got nervous, and I FOMO'd. And so, if you've been watching my previous videos, you know that I had a strategy of, I had $5,000 on BlockFi, and I saw that things were getting a little too hot with MBRV and with Google Trends and all that. And I shared with you my strategy of, I am going to put $200 a day into crypto. I'm going to convert that from the US dollar into crypto to adjust for potential corrections. And so I watched this video and I was like, you know what? I'm afraid that I'm going to miss out. So I'm going to put $1,000 into Ethereum and $1,000 into Bitcoin. And so there are certain people who are just hype machines. You have Crypto here. He is a hype machine. Take anything he says with a grain of salt. He has some good content. You have the Moon, Carl. Do not pay attention to the Moon. Just erase him from existence. He has a pretty big following, over 100,000, maybe 200,000 followers on YouTube. Just ignore him, and definitely ignore his Twitter. I mean, he tweeted something today about, we could be hitting $100,000 in 3 days. And then the next day he'll tweet something like, we could be correcting all the way down to $30,000. It is sensational BS. Now, DaVinci J34, I actually have a lot of love and respect for this guy. I think that's DaVinci J15. Anyway, he's on YouTube. He's on Twitter. I like him a lot. He has been, and the reason why I like him is you can look up on his account that, he begged people in 2010, please just buy $1 of Bitcoin. That's all I'm asking. And so he was in, he's got to be worth 9 figures right now. And he provides decent but boring technical analysis. I'll check in on him every now and then. But Crypto, the Moon, stay away from these guys unless you want to make the same mistakes that I made on Friday, which is just, I FOMO'd. And so, I mean, sure, yeah, I'll get that money back, and it's not a dent in my portfolio, really. It's like, I'm doing just fine. I bought in a little under 5 figures, so it's just annoying. It's like clickbait. Look at that. Bitcoin to $1.2 million this year! Exclamation, etc. That's what they do to get you to click on their video while they're walking on a beach in a beautiful tropical climate, etc. So, moving on. Bitcoin rally. Oh no! Bitcoin rally faces potential test from falling market liquidity. Liquidity. This is what I mean when I say we're running out of Bitcoin, is that there is very little liquidity. We are running out of liquidity. What does that mean? That means that a huge chunk of people are buying Bitcoin and holding it with the intentions of never selling or not selling for quite a long time. And so Glassnode.com, a great site with a ton of analytics. You now have to pay to see charts. There was a time when you didn't have to pay to see these charts, but they saw that people were really valuing it, and I can't blame them all that much, because I remember when I was looking at these charts for free, I was like, man, they really should be charging for this, and unfortunately now they are. But they have plenty of information on falling liquidity. And I want to compare this. Just think about this for a second. In 2017, at that peak, what you saw was a lot of an increase, a massive increase in liquidity. And why was that? Because people were preparing to sell. And so if you were to look at these charts and compare it to 2017, you'd see a whole lot of liquidity, a lot of increase in liquidity. If you were to see these charts now, what you would see is that there's a huge decrease in liquidity, which is a bullish sign. Overall, that is an absolutely bullish sign. However, this Bitcoin rally faces a potential test from falling market liquidity. What this means is that the price can move. It's a lot more volatile right now, the price of Bitcoin. If some idiot in China, no offense to Chinese viewers, I doubt there's many of you, but if someone in China who has 100 Bitcoin decides, you know what, I'm going to sell my 100 Bitcoin, what would that be? $58,000 right now, or well, 52,000, 53, that would be $5.3 million. I'm going to take my $5.3 million, or however many yuan that is, and just, call it. That move right there, just 100 Bitcoin can cause the price to crash by, not crash, but go down by $1,000. And so you will have, throughout this bull run, people being like, all right, I'm happy. I have 100 Bitcoin. I'm going to sell my 100 Bitcoin and live a happy life from now on. And retire, whatever. And that's going to happen. That's going to cause the price to go down by $1,000 per coin. As little as 100 Bitcoin can do that. But what's going to happen as that price goes down? I mean, like I said, Michael Saylor this week is buying $2,000 on Coinbase, mind you. He is buying $2,000 a second worth of Bitcoin. What an amazing opportunity right now for Michael Saylor. How convenient, actually, that he's not having to buy $58,000 Bitcoin. He can buy $53,000 Bitcoin and do that at $2,000 a second and bring his dollar cost average lower than I would think what he thought it was going to be. So the whales will look at this dip. Let me look at the price of Bitcoin again. All right, 52,834 or 53. It might be charts giving me different numbers here. Either 53,145 or 52,834. Don't pay attention to that wick. That's nothing. So liquidity, that's going to cause volatility, but all that's going to do is cause people like Michael Saylor, MicroStrategy, Morgan Stanley, PayPal, etc., to buy those dips. And if people get nervous, it's like it plays into the whales. The whales are going to buy these dips, and they're going to be like, thank you for that cheap Bitcoin that you got nervous about and sold. That is going to happen. That is what's going to happen. In 2017, there were 30 to 38% corrections, and people got scared. I expect in 2021 there to be something like 11 or 12, maybe even more, 20 to 25% corrections. So not as big of corrections, but more smaller corrections. And so that's maybe what we're seeing right now. 25% from 48,000 would put us around 44,000. So keep that in mind. Don't panic if you see some kind of correction, because the whales will come in and scoop up all of your deliciously cheap, I can't believe I just said that. I'm going to keep going with your deliciously cheap Bitcoin. Oh, we are so early with institutional investment. We are so early. Okay, I'm just nervous about those of you who sold your GameStop at a loss, who are now at putting it into Bitcoin, to Ethereum, etc. Moving on, Tesla. I've said it. I'm nervous about Tesla. There is a scenario, guys. I know that you're gonna think I'm crazy. There's a scenario where Tesla goes down to $200 a share. I just want you to keep that in mind. Do I see that happening? No. But I certainly see a scenario where Tesla, the price of Tesla goes down lower, half of it peaked at $900. I could see a scenario where it goes to $450 easily. And so it is too hot. I would stay away, except for buying shares. I mean, I buy $10 of GameStop every day. I buy $15 of Tesla because long term, I'm bullish on Tesla. It's just too hot right now. And the price of Tesla right now, let me go to that pre-market, is down even further, $760, which I would think those who are holding options in Tesla are pretty terrified right now, as they should be. And being a Tesla bear over the last year, which I have not been, but being a Tesla bear has definitely made you look stupid. It's just something. There's no way this is sustainable. No, there's no way. So here's why Tesla's down today. JD Power Dependability Survey places Tesla among worst ranked car brands in the United States. Up until this year, JD Power did not have Tesla in this survey list. But this year they do, and what they have found is that while Tesla has tremendous brand recognition, the actual performance of their vehicles is subpar. It's actually among the worst, which that could turn on a dime. They need to solve this problem now, okay? Because if Tesla becomes known as with the branding, if you put them with like Chrysler or Dodge, which in my mind is the very bottom of the barrel, there may be no recovering from that. I don't want to scare you too much. I am bullish on Tesla long term, but they need to address this. So let's read this. JD Power, the automotive industry's longtime monitor of quality, blah, 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 included Tesla for the first time, and Tesla did not have a good showing in its debut. JD Power uses consumer survey data to report the number of problems per 100 vehicles owners experienced during the previous 12 months, a metric it calls PP100. Tesla got a score of 176. The higher the score, the worse, which would place Tesla 31st out of 34 brands covered in the dependability report. JD Power held back from including Tesla in its official rankings previous years, instead choosing to profile, etc. Let me move on. Ranked or not, Tesla's results put it in the same category neighborhood as Chrysler, which came in at 166, and Jaguar, which had a score of 186. Two brands that, as far as car troubles are concerned, oh my goodness, lumping Tesla with Chrysler and Jaguar, it's like, oh, that is not pretty. So Lexus took the top spot with a score of 81. It was followed in the top 5 by Porsche, Kia, Toyota, and Buick. All those brands. I'm hoping to buy a Toyota this week, actually. We have one vehicle, and that's why, because stuff like that, scores of 81 and better. The industry average was 121. Tesla was at 170 something. So the survey covers original owners of 3-year-old vehicles. So the 21 study is reflective of 2018 vehicle models. It encompasses ownership experiences like audio, entertainment, navigation, engine and transmission, exterior and interior quality, displays, driving experience, climate control, and seats. The dismal results clash with the overall theme of this year's report. Anyway, so I think this is why Tesla's down today. And hey, who knows? Maybe this is a buy. Maybe I'm crazy. Maybe this is a buy the dip opportunity. I think there's more dipping to go. So, lastly, today, Michael Burry has been tweeting a lot about the US dollar today and yesterday. And so check out his Twitter. This is actually his Twitter. It's just weird because he deletes a lot of his tweets. And so the first time I came upon it, I thought, oh, Michael Burry just now created a Twitter account. who knows? This is probably not real, but this is actually Michael Burry. He's been tweeting about a pending possible collapse of the US dollar, and I found that this post on Reddit was helpful if you don't want to go to the thing. I just frustrating about Twitter is, like, for me to read all of Michael Burry's posts, I have to go to the bottom and I have to find what the first post about that was and then work my way back up. And so instead I'm reading this Reddit post which covers it quite nicely. And so let me read this and give some thoughts here. You've probably already seen Burry tweeting about warning everyone, but you may be wondering what exactly he's warning everyone about. Burry and myself and me think this market is going to crash, and here's why. Well, all right, I think it's going to crash. When is the crash? Is it going to crash from 60,000? And when will we hit 60,000? 2023? So timing the peak is impossible. If you were to get out now, maybe we are at the peak and maybe it's going to crash now. Or maybe not. And so timing that peak is impossible. But a crash is coming. People are going to lose lots of money, and Redditors in particular are going to lose a lot of money. But if we are still on the way up, Redditors are also going to make a lot of money. So, all right, Burry thinks the market's going to crash. Here's why. Inflation. This is the big reason why Burry believes this market is a bubble. For those who don't know, like many of you who are new to this sub, inflation is the rise in the general price of goods. Okay, everyone knows that. Some inflation is good for the economy, and the Fed target rate for inflation is 2%. Here's why inflation is increasing. Obviously, last year the markets dipped temporarily due to COVID-19, but since the March dip, the Federal Reserve and U.S. government have kept the money printer printing nonstop for over a year now. There's a ton of new money in circulation. If you look at the M2 money stock, I'm not going to click on that link now, but you'll see that nearly 50% of all U.S. dollars made were made in 2020. That's not an exaggeration, and that is not sustainable. The U.S. has never, I think it's actually lower than 50%. I think it's 20%, closer to 20%, but then within the last few years, it's been 50%. But still, nearly half of all U.S. dollars being printed within such a short amount of time in a country that is 250 years old, almost. That's insane. So the U.S. has never printed this much money in its entire history. We've seen over 3 trillion printed in the last year alone. So why is this a problem? Stimmy means I can gamble more money on the stock market, right? And that is what most people are doing. And I would say Bitcoin, Ethereum, crypto in general is the solution to this problem, not the stock market. Stock market's fine for if you believe, for sure, if you like the stock, a particular stock, put money in the stock market. But with a decreasing dollar, put it into something that's more honest. And I've talked about that before. But anyway, if you've ever taken an introductory economics class, you'll know that when there becomes more of something, the value of that thing goes down. If I have $1 and then suddenly everyone gets $2,000 from a stimmy, my $1 doesn't seem so valuable now, does it? So people are seeing this, they're realizing it. It's like we all got what, $1,200 a person last year, then we got $600 a person, and now Biden wants to add an additional $1,400 per person under a certain wealth target, which most people are. And I'm going to get, if Biden and the Democrats have their way, I'm going to get personally $1,400 a month between July of 2021 and June of 2022. Now that hasn't passed, but I think it will pass, and I think that some people want to make that permanent, which is just unsustainable. It's ridiculous. And what that's going to do is it is going to decrease the value of the dollar, and it's going to happen rapidly because what we are seeing right now is unprecedented. It's ridiculous. And so I don't celebrate the fact that I will be getting $1,400 a month for my kids, except for the fact that I will be converting all of that into something else for their sake. But moving on. This is exactly what's happening with the U.S. dollar. If this continues at this rate, it'll cost you like $50 for a slice of bread or something insane like that. I'm not going to be that dramatic. I mean, sure, 30 years from now, a slice of bread will cost $50 or whatever the U.S. currency is, which it may not be the dollar at that time. But, you know, things will increase in price. There's no stopping that. And they'll increase more rapidly over these next few years. But you might be saying, obviously this isn't going to happen because we have the Fed to control our money supply. And you'd be right. Here's the next point. You'd be right. But what happens when inflation goes up? The way the Fed decreases money supply historically has been higher interest rates. All right, this is huge right here. I'm tempted to make myself bigger. I'm going to make myself bigger. All right. The biggest, I know that so many of you are from other countries, but I'm assuming that you also know that the United States, what happens in the United States as of right now does have a significant effect on the global economy. So you don't mind me talking about the United States because this will affect you as well. I mean, 2008, the housing crisis, the 2008 financial crisis, that turned into a global crisis. If we have another crisis like that in the United States, that will turn global. And stop trusting us. So, okay. All right. Sorry, I was looking at some price alerts on my phone. The biggest threat to the U.S. economy and to the U.S. dollar, I don't hear this anywhere. But it's true. The biggest threat to the U.S. dollar and U.S. economy is the interest on our national debt. And so there will come a day in many of our lifetimes. I'm 39 years old. Most of you listening to this are younger than me. If you are younger than me, there will come a day when the United States government, when the interest alone on our national debt is greater than the entire GDP, the entire amount of money that the United States takes in from taxes. Interest alone on the national debt will exceed that. And so when I see something like this that says, where was that? The way the Fed decreases the money supply historically has been higher interest rates. We are in a position right now in the United States where we cannot increase interest rates. And I used to work in the mortgage industry, and so I paid a lot of attention to interest rates. And I saw and I came to the conclusion that, yeah, there were times that they would try to increase the interest rates. And so, for example, a 30-year loan, the highest interest rates on a 30-year loan that it's gotten within the last 10 years or so was 4.5%, which is historically insanely low. But that's the highest that they were able to get it at in the last 10 years. Right now, it's at a never before seen interest rates. I've heard of people being able to get a 30-year loan at 2.85%. That is unbelievable. And so the reason why that is, and the reason why that will remain until everything collapses, is that the Fed cannot increase interest rates. They just can't, because that will accelerate that future day when interest rates become, on our national debt, become greater than the GDP. Instead of that day being in 2050 or something, if the Fed increases interest rates, that day, that doomsday scenario will become, 2040, 2035? And so the Fed is stuck right now. They're never going to say that, but they're stuck. We have this plummeting dollar. The way we handle that is by increasing interest rates. We can't increase the rates because of this upcoming doomsday scenario. So between the two, we're just going to hope that the US dollar decreases slowly, decreases in value not as quickly as we know it's going to happen. So we're seeing something very dangerous right now. That's why I'm saying this is unsustainable. In the 1980s, when inflation was at then all-time high, the Fed funds rate reached nearly 16%, which equated to something like 18.5% mortgages. And again, we're at 2.85% right now. The current Fed rate has been at a historical low for the longest period ever, since 2008. And they are being forced to keep it that low. So high rates, who cares? The higher the rates, the harder it is to borrow money, meaning that business hire fewer people get laid off, businesses stop expanding, and the economy stagnates. Hence the term stagflation. This in turn leads to higher unemployment. In the 80s, when inflation was at 14%, unemployment reached nearly 10.8%, which was the highest since the Great Depression. Higher rates also means monthly payments on adjustable mortgages skyrocket. So we have, back then they had high interest rates, which led to high unemployment. We have unbelievably low interest rates, and we have high unemployment because of COVID. All right, I'm going to minimize myself more. I forgot to do that. And just prepare accordingly. If you have stocks right now, I'm not saying to sell. I have stocks. I'm not selling. I'm going to just use the crash to buy, because crashes are tremendous buying opportunities. So one very important thing. Okay, I got that. Housing, I expect housing is booming right now for some insane reason in the United States. I expect that we're gonna have this period of catching up, where people who have lost their jobs lose their homes, and housing will maybe not crash, but it'll struggle for sure. Oh, that's where he talks about the housing market bubble. I do believe there's a housing market bubble right now. And retail investors have also been flooding the stock market, and many have no idea what they're doing and literally gambling their life savings on Tesla FDs. This is bad. People gambling their life savings in the stock market is funny on WSB, but when these same people lose their jobs and their life savings at the same time, rope will be mooning. Again, I don't want to scare you. For those of you who have investments, there are tremendous buying opportunities right now. And things like this just confirm the reason why I am 80% in crypto. And so, I want to ride this wave. We are on a wave, and who knows when this wave is going to peak. And if I were to sell right now, I think I would most likely be kicking myself. I'm just saying that something like this will come. And the stock market will crash. But where will it crash from, and where will it crash to? That's the question. And so no, by no means do you get out now, especially because we are printing more and more money. So how many more bullets does the U.S. government and the Fed have in their chamber? I don't know. I think they can keep this charade going on for a little bit longer. But there will be a crash, and people will suffer. So... oh man, one thing that will not crash, one thing that will certainly be more valuable, no matter what happens crash-wise 10 years from now than it is today, is Bitcoin. Buy and hold. Buy and hold. So anyway, I went on some rants today. That is all I have for today. Again, let me know what you want to talk about in the comment section. I would be happy to talk about whatever it is that's on your mind. And until then, I will see you tomorrow. I hope you have a good day, a prosperous day, and that things go well for you. Until then, have a good rest of your day. See you.